across the board, we have good gains coming in as far as the Asian markets are concerned.
SEBI has moved the top court and is seeking a 6-month extension for completing its investigation into the Adani-Hindenburg saga.
This is the first time ever that I have seen a 3% ROA for such a balance sheet.
Very immediate resistance levels are 18,100 and then 18,137.
Minda Corp has now filed an application with the CCI to acquire up to 24.5% stake in Precor. It's a bright shade of green this morning, 50 points, 60 points almost higher for the Nifty.
Earning uplift seems to be an important opportunity in the next 2 or 3 years.
This is pure, high-quality, retail, sticky deposits. We are very happy about that.
We do believe that maintaining this kind of growth when the market conditions are favorable is absolutely doable and possible.
Up now for the 6th consecutive day now, and the Nifty is holding up with a gain of nearly triple digits.
The rakes are to be delivered over the next 5 years, and 35 years is actually the issue is really that this is something, which is we have to look at the AMC for 35 years.
Two-wheeler names like Bajaj Auto and Eicher Motors came back in a big way.
Maruti Suzuki, we expect the growth higher.
The Nifty is in a cheerful mode. We have 103-point gain on the Nifty as we speak.
Well, that was a day so far. Hello and welcome to a fresh new edition of Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surbhi are here in the studios. Guys, hi.
Hi.
Afternoon. And of course, Nigel is joining us from the newsroom floor as always. Nigel, hi. Well, inching up and crawling up and doing it in a very steady kind of fashion, aren't we? The Nifty, by the way, is holding on to the morning gains. I mean, it's... solid 90, 100 points, but it's not incrementally added anything. Not that I'm complaining, but the fact is we're up about 0.5, 0.6 in that range since the very morning. And that's where the index is holding even now. Banks also, by the way, with the 0.5% gain that we have on the Bank Nifty, we're now about 1.5% away from all-time highs. In all likelihood, if we do get to new highs, banks will do it before the Nifty itself. And mid-caps and small caps far better, 1%, almost 1% each on both these indices, respectively. Market breadth is looking solid, about 2:1 in favor of advances. And of course, in terms of news flow, etc., you want to track. Lots of results are coming in, which we, of course, have our eye on. But the big global cue, of course, is the Fed outcome tomorrow evening, which we will react to day after. The market is betting on that we'll see another 25 basis point hike, and then there'll be an indication of some sort which will tell the market that no more hikes, a long pause, and that's going to be read as dovish as well, if the indication does come through and it's not left open-ended. So these are cues to watch out for. In very fine form and federal markets find itself. Broader markets are the star once again. Reema.
There are back-to-back FOMC meets. So the next one, of course, is, today, tomorrow. After that, in a span of 40 days, is the June 13th and 14th. So exactly 40 days after. Then again, after 40 days, on July 25th and 26th, will be the next FOMC decision. So the signaling is going to be very important because it pretty much sets the course for the next two FOMC minutes, which are back-to-back. But talking about the individual sectoral movers, commodities and metals are doing pretty well. So Tata Steel reports numbers post-market as. But right now, you've got Tata Steel up 2.5%. Hindalco has gained 2.7%. JSW Steel has come in for some buying interest. And IT's been on a tear, particularly something like Infosys in the frontline pack. Accompanying it is Tech Mahindra, and even mid-caps like LTI, Mindtree and Emphasis are higher in trade. In fact, LTI Mindtree reported a fairly disappointing set of numbers last week on Thursday post-market hours. But in a span of 2 days after those disappointing numbers, the stock has seen a rally of close to about 10%. But, Subi, the day so far is looking good, particularly the mid-cap end, right?
Yes.
So many individual stocks are up more than 10%.
Absolutely. It's definitely a mid-cap day. But even on the large caps, I think one of the thoughts that was crossing my mind when you were talking about LTI Mindtree is that I think the selling in large cap tech is also done. The market's digested whatever had to happen, the Infosys shocker, it's over and done. In fact, a lot of these stocks have seen some accumulation at the lows, and that's only aiding sentiment. Reliance, by the way, will be, by the time we come back to trade tomorrow, we will have the announcement from Reliance Industries. Its secure and unsecured creditors are meeting today to approve the demerger of the financial services business, which obviously is the next big trigger for the stock and for the company. That's a steady pillar for the market today as well. But just a word on the mid-cap flurry that Reema alluded to. Railways, once again, is this absolute outlier theme in the market. Every other day we see these stocks flying. RVNL is up another 10%. They announced an order win. They're in a joint venture. The order is about 2,400 crores. They're 50% partner, so that's an added kicker. But IRCON, IRFC, even BHEL, you'll hear a lot from BHEL on the show today. We spoke with the company, and they're extremely bullish on their railway segment as well. So all of these stocks are up and about. Beyond earnings and results as well, you have movers and shakers like, let's say, Lux Industries, and NMDC Steel, and REC. So actually, there is a fair amount of a PSU play in the market. There's no taking away from that. Just want to mention one more stock. Those are some examples in terms of the mid-cap and small-cap action. One more stock, GNA Axles. In case you track this one and you are wondering why it's down, despite what seemed like a pretty solid fourth quarter, it's the commentary. The management, Mr. Singh, told us that the North American market has seen a little bit of a shakeout in the first quarter and demand is down 15%. They're hoping other segments will make up for it and second quarter onwards North America will revive. But that concern seems to be playing out on the stock. But otherwise, no complaints, Nigel. It's up and away and about 3.5% away from the all-time highs now.
Well, that's right. Surbhi, but given the kind of rally that we're seeing, it appears the smarter money is playing for a bit of a pause or some consolidation. Whether we get that or not is going to be crucial. But at the start of today, if you looked at two strikes, the 18,100 put as well as the 18,200 call, the premium on both these two was around 57 rupees. So these writers, they're working for a bit of a band. On the upside, since the 18,200 call is getting written, they're working for that 18,260 odd level holding out. That's on the upside. And on the downside, they're expecting this 18,040 odd level to hold out. So that's the broad band, 18,040 to 18,260 on the upside, 220 points approximately. In case there is some consolidation, then these call as well as put writers will make some money. I'll tell you one more thing. Since we had a truncated week and we were missing out on Monday, that's why you will have the weekly expiry for the Nifty that will take place in the earlier. So it will take place in a shorter duration because you have Monday off. So that's why in the next 2 days you'll have Nifty expiry that will play out, weekly expiry. And today you'll have the financial expiry as well, financial services index. So keep an eye out on some of these banking as well as financial related stocks. And just one final word, since everyone's talking about the index, I think the broader markets is telling you that there is a feel-good factor that's playing out. The Nifty is up close to around 0.5% odd, but just pull up the mid-cap and the small-cap indices. After being outperformers, they're up close to around 1% apiece. So that's telling you that retail portfolios are feeling rather good, guys.
1% on both indices, Nigel. So yeah, that's true. Well, let's tell you how to position yourself if you're trading indices or stocks, what you should be doing in the next 1 hour. Mitesh is joining in with exactly that. Mitesh, hi, good afternoon. Good to have you here. So, I mean, the March higher continues. Although we have the same 100 points that we had earlier in the day as well, not building on. How would you read things, and what would you do? How would you trade things now?
Good afternoon, Prashant. Well, I think the market after gap up opening has been slightly sideways, but again, no sign of weakness or kind of profit booking which could see the market being pushed down. So we must assume that the uptrend continues. And I've mentioned, that the January first week highs of 18,250, 270 could be the pivot which the market could test. I think it looks like that. What traders can do possibly is to trail their stop losses now at about 18,100 levels and hold on to maybe 5 points below that and hold on to long positions. And this is a spot level which I'm talking to. Having said that, on the stock side, at the beginning of the show, I think, Sophie was talking about Reliance. I guess I think that's on the buy list. After a good time, Reliance is showing now signs of some upward expansion, though I think today the bar is, the candle is much smaller than Friday's, but the overall indicator setup is quite positive. So I'll go with a long here with a stop below 24.20 for targets of around 24.95. And the other call which I have is Steel Authority of India Limited. That's a buy with a stop just below levels of 83 for targets of around 9.
Okay. Thank you very much for that. Let's take stock then of the April auto sales numbers. Turned out to be a bit of a mixed bag. Hero MotoCorp under pressure. Eicher Motors, on the other hand, is leading with gains. Sonia is here with a recap. Sonia.
Well, thanks a lot for that. It was indeed a mixed bag for the auto sector. So let me start with the good numbers. From the two-wheeler space, it was Eicher Motors and Bajaj Auto that did pretty well this time around. For Eicher Motors, both Royal Enfield and the commercial vehicle business were very strong, both seeing growth in excess of 18%. For Bajaj Auto, the stock in fact hit a fresh 52-week high after the domestic sales almost doubled on a year-on-year basis. However, exports continue to be under pressure and that dragged the overall figure. Now for Maruti as well, it was not a bad showing, just that it continues to be in single digits. So total growth of 6.5%, led by an 8.5% growth in the domestic business. Exports were under pressure, but the management said that that was just a shipment-related issue and there's no real concern in the export markets. On the downside, as you mentioned, Hero MotoCorp is one of the biggest nifty losers because of a weak showing this time around. Not only were the numbers below street estimates, there's a steep fall of 5.5% that the company has seen at a time when its peers are reporting a growth in their numbers. Also, you had Tata Motors, very peculiar, at a time when peers like Ashok Leyland and Eicher have reported a good growth in their numbers. Tata Motors commercial vehicle sales were actually under pressure, total CV sales down 27%, and that dragged the overall performance with it. So this time around, you'd have to say it was a mixed bag from the auto pack. Back to you.
Thank you very much for that, Sonia. Even Maruti, the management sounded a note of caution, indicated that the retail sales have been a bit muted. The dealer inventory levels have gone up, compared to what it was at the beginning of the year. But Dipan Mehta, director at Elixir Equities, is now with us. Dipan, on the road, it appears that there are a lot of Tata Motor vehicles, particularly on the EV front. So what explains this weakness that we've seen in the month of April? Do you think the best of the growth rates are behind? And anything that stands out for you in terms of the auto sales numbers as a trend, in terms of management commentary or numbers?
Yeah, good afternoon, Nima. Thank you for finding us. So I think that we have that premiumization. I mean, if you see Maruti is among the better players, especially if you go deeper into Maruti's numbers, it is more the premium models which have shown the growth rate, and the entry-level models you are seeing year-on-year sharp decline in the volume production. So even if Maruti has a 6-7% of volume growth, the actual realization per vehicle sold will move up by at least 10-12% or so, and that's the story as far as Maruti is concerned. Eicher Motors, I think all the effort that they have put into expand the distribution network, that is now finally coming into play over there. And some amount of export benefit also, as all the exports were lower for this month. And I think Tata Motors is very difficult to understand why they should have lower sales in commercial vehicles. As I heard, that yes, Ashok Leyland and the ECB have both done well, so maybe management needs to explain why this sharp reduction is there. But nonetheless, Tata Motors is all about JLR, and so long as JLR is running on a growth engine, the company's financial performance is generally fine. But I'm pretty much, I would say, satisfied with numbers that come from the auto industry so far, and it does seem that partly base effects coming into play, and there could be some concerns because of higher interest rates. But I think if those headwinds are more or less tended to or try to recede over there, so you may see at least high single-digit type of volume growth, but the average realization per vehicle for the industry is going up phenomenally.
Devan, just a brief comment on if you have any strong views, that is on the broader market itself. Not very far away from previous highs, but is it looking in a pretty strong shape for more meaningful gains, or it's going to be touch and reverse? What's your sense?
19,000 in May. That's the target. It's possible. The news flow on the corporate results front is exceptionally good. Larger companies, index components have really delivered, with the exception maybe Infosys. And so far, whatever numbers I have seen, except for one or two companies, you're getting more ideas to buy than disappointment. So very optimistic on the market. I think if you have a little bit of push coming in from the FII, then you could easily see another 1,000-point rally in the next 2, 3, 4 weeks or so.
19,000, Deepan, in May. So no sell in May and go away. It's stay in May and make some hay. Perhaps that's the new theory, right? In case it plays out. Okay, stay on, Deepan. We'll have more questions for you. Another big theme, obviously, we're tracking in the market is this mega move in railway stocks. It's almost on a daily basis. Stocks like RVNL, of course, defying gravity. The kicker actually perhaps came in also from our conversation with BHEL today, because the BHEL management told us that there are at least 2 more large tenders in the pipeline from the Railway Ministry this year itself. And in any case, some of the other stocks, not necessarily in the same space as a BHEL or a RVNL on the wagon side, even some of the others are up and about. Vivek, take it away. These stocks have been the big stars of 2023 so far.
Well, you're absolutely right. And as you mentioned, the real kicker has been the fact that it's been the Vande Bharat tendering activity that's come to fruition that's actually aiding the gains as far as, these listed rail PSUs as well as, some of the private companies are concerned. Now, number one, the Vande Bharat opportunity in itself is quite significant. The first ordering activity of 200 train sets was close to 24,000 crore, which included both the delivery of the train sets as well as operation and maintenance activities. Now, what we understand is that there are going to be 2 more Vande Bharat tendering that will happen in the next couple of years. So another 400 train sets is what the government is likely to order, which is what is actually keeping the street quite optimistic as far as the order book prospects of these rail PSUs are concerned. Now, when you're talking about 2 specific names, RVNL as well as BHEL, remember RVNL emerged as L1 or the lowest bidder in the first tranche of the Vande Bharat bidding. And along with that, the company also recently got upgraded to a Navratna status, which basically means that the company has increased independence in making capex plans. Now, when it comes to BHEL, we had the management on our channel today. Now, what the company told us was that along with being quite aggressive in Vande Bharat tendering, also what they're going to do is going forward, 50% of their order book is going to be from non-power segment, so which again is a significant kicker as far as BHEL itself is concerned. Now, talking about the stock movement of these companies in 2023, the relative underperformers have been IRCTC, IRFC and Railtel. But have a look at both of the stocks that have got the Vande Bharat order. RVNL up 73% in 2023. Titagar Wagons up 49%, BHEL again a relative underperformer 3% higher only. But also along with that, names like Rides up 19% and Ircon up almost 38%. So really the rail stocks have completely outperformed as far as 2023 is concerned.
The railways is looking at a complete overhaul of the signaling system. And there also we have started development work. We are looking to take a foothold in that market also. What the railways are doing is they are clubbing their requirements. They're coming out with mega tenders. And the last 2 tenders have been in the similar range also. So I think we are going to be there. We're going to be another another 2 tenders in this year, and there's more later on.
Stock like RVNL is up 250% in the last 1 year. Ircon is up 100%. Even this year, the gains for stock like Ircon are phenomenal. I think 70-75% higher. Deepan, no one's doubting the opportunity. I think what the managements are telling us and the pace of ordering from the railways is, no one's denying any of that. But purely from a market perspective, what advice would you put out given this kind of a mega rally? And also, does all of it look above board? I'm not trying to insinuate anything over here. Or is it just, it's a bit of a herd mentality that's attached to these stocks now?
See, Surbi, we are in a nice upcycle as far as capex is concerned. And this capex is not just restricted to infrastructure, roads or highways, airports, but it is across the board. We are seeing expenditure taking place in the railways. And on the defense side also, I think we are seeing a lot of capex taking place. So this is part of the entire capex investment theme which we are tracking. And right now, I think all the railway stocks have moved up. They are 10% up or so. But I think on corrections, I think these stocks can certainly do pretty well and give good returns to investors. But gradually, we are seeing very good order visibility and earning visibility for these companies. And next 2-3 years, I think they can easily deliver 15-20% type of top line, bottom line. And most importantly, a lot of these orders are coming in at very decent margins because the competitive intensity for the capex sector as a whole and railways in particular also has slightly receded. So I think very positive on entire railway space, and government focus is there on railways on and off. We keep hearing positive news flow over there. So maybe not today, but maybe 2-3 weeks down the line on results or when the market's a little softer, one could look at railway stocks. I don't think that they have run their full course.
All right, Deepan, we had a few managements today and some of the stocks are reacting very, very positively. So I just want to ask you about them. Do you track Datamatics? The management joined us and they sounded very, very confident. Revenue growth of mid-teens, margins of little more than mid-teens. I don't know whether you track it, but in the last 1 month, the stock is up 45%. Any views out there?
Sorry, Nigel, don't track the stock, although it's a very interesting, but has a very patchy record. So that's the reason why it's not on our watch list.
Got it. All right, taking that caution on board as well, but big move is what you see in the last 1 month or so. They're guiding for better numbers after delivering a fairly good set of numbers in the past year. But Deepan's view is in the past, there's been some bit of patchiness. So just keep an eye out on that. Deepan, I wanted to ask you about a couple of these cement names. We had Orient Cement today as well as Kesoram Industries. Both of them joined us. And they are talking about good volume growth going ahead. Price increases haven't come about. But I was looking at pet coke prices and they have declined substantially. Just back of the envelope calculation, based on that only, it could save them 100, 200 rupees or so. Your view on the cement stocks from here on?
Nigel, I'm negative on cement, and we've seen very decent double-digit volume growth for cement companies across the board. Yet the operating profit margins are lower because of higher costs. And that's because of increasing competitive intensity, and it's going to get worse with more and more expansion plans going on stream. So, in my opinion, it's best to avoid the cement sector. Valuations are pretty rich when you compare to other commodity stocks. And the better play is in the cement consumers. I think we saw the way real estate companies came out with their numbers. And just watch out for the engineering construction companies also. Those numbers also be pretty good. So my preference is for the commodity consumers, the cement consumers, rather than the actual cement companies.
Dipin, Reliance, obviously today is a big day, and we're expecting the approvals to come through for the demerger of the financial services business. All the details are in. I mean, we know it's going to be a 1:1. But what next? Because the stock is at a smart move along with the market rally from lows of around, I think, 2,200. We're looking at 2,450 almost on Reliance. Your thoughts?
See, Surbi, you have to say that the timing is very good. All the NBFCs, the fintech, the financial services companies are in limelight, and they have delivered good numbers, and a lot of market attention is over there. And at that point of time, when Jio Finance will list, I think it will get a very good response from the retail and institutional investors as well. So my sense is that the stock is moving up in anticipation of investors wanting to get a pie of that particular company. It's got great prospects, and it has a full muscle power, and the network effect also will come into play. So very positive on the stock, and this particular demerger, I think if it is followed through for the other businesses, then we will see a great value unlocking opportunity in Reliance Industries, and that can carry the stock price even higher from these levels.
Dipan, do stay on. Need to slip into a very short break. We'll come back, and we'll also be joined by Amit Gupta of ICICI Securities on the other side.
Welcome back. You're with us on Closing Bell, and now we're putting the spotlight on the whole flurry of financial earnings that came in over the long weekend. In fact, we caught up with a lot of managements as well. A lot of the stocks, for instance, IDFC First Bank reacting on the upside. SBI Card has been flattish. So let's listen into the management commentary, and then we'll come back and discuss some of the names with Deepan.
Going forward, the credit cost will continue to be the major focus, and we are pretty confident of holding it around 0.5 to 2% range. That's exactly the going forward plan of action. I have 517 branches. Both put together, we will be in a range of opening around 60 to 75 branches during this year.
So we are looking at organically growing the bank very aggressively. As you saw that our risk-weighted assets and our capital consumption on the SME side of the business is going up, which is good news because we are now going beyond gold and also building other businesses. As our retail assets and other businesses grow up, the capital consumption will keep going up for the right reasons. The gold loan will continue to grow at least for one more year at a similar rate, and gold loan grew very well last year as well because we need that business to fund our growth in the other businesses.
we will always aspire for a 1 million net growth card addition in a quarter. So gross is more like a ways to achieve that, but objective is to have a 1 million net growth in the cards while keeping an eye on the market share and keeping an alpha for the market growth.
If we do see that the increase is beyond 25 basis point going forward, there could probably be an increase to customer also to the extent of at least 20-25 basis point. Therefore, protecting margin is not our concern at all at this stage. At about 20% capital adequacy, we don't really raise capital and we are making sufficient profits, which are also getting added back to the net worth. So we don't have any plans immediately, at least for the 2025 growth plan that we have put out, we don't need to raise capital.
Okay, well, those are lots of management commentary. We have also, by the way, the IDFC First Bank management with us, and numbers have been pretty good. Stock's been doing well. Deepan, out of the commentary you heard, out of these names, RBL, CSB, Mahindra Mahindra Finance, SBI Cards, throw in an IDFC as well. Do you own anything? Do you like anything?
Yeah, Prashant, first a disclosure that we own and we recommended IDFC First Bank in the past. And I think it's an absolute fabulous set of numbers coming in from the company, best in class, I would say. And I think a lot of numbers, bank numbers have come exceptionally good. But I like to go for the IDFC First Bank because of their focus on granular deposits. I think the next real challenge for the banking industry and also the NBFC is going to be raising resources. I think lending has become easier. The credit cycle is still remaining pretty strong. There are not going to be as much on the NPA cost front. But raising resources, managing your capital adequacy, I think those are going to be the big issues going forward. And companies which have a high CASA and are focusing more over there, I think will be the winners. Keeping that in mind, I think we're very positive on IDFC First Bank. We feel that the company can grow at 25% compound for next 2-3 years or so. And certainly it can trade at a higher price to earnings or price to book multiple from these levels.
All right, Deepan, I know you love to travel. And luckily, the World Cup this year around is in India. So you'll be saving some money out there. But you may have to travel across, the country. Wanted to ask you your view on Interglobe Aviation. A couple of those companies, Go First as well as Spice, they seem to be having some funding problems. But Interglobe has moved to the high point of the race. So what's the view out there?
Oh, I think it will be the best ever numbers coming in from Interglobe Aviation. And really looking forward to what the management has to say. See, Interglobe Aviation had been very early in terms of ordering new aircrafts, and they've been consistently increasing their capacity. And now what we are seeing is an absolute boom time for the aviation industry, where the number of the demand also is very strong, and the yields also are exceptionally good. Competitive intensity is on the lower side, and we are seeing record passenger traffic. So you cannot have a better situation than this for Interglobe Aviation. And I think that this next few quarter numbers will be very solid for the company, and that will attract a lot of investor interest. The stock has been moving sideways and has underperformed the past 2-3 years or so because of various issues, including a feud between the promoters. But now all of that is behind. And I think that, with the way the passenger traffic is moving up and oil prices, on the other hand, are sliding, you're going to have the best of both worlds for the aviation sector, and maybe Interglobe Aviation could be a good trading bet as well as a good long-term investment as well.
By the way, in a bit from now, Deepan, Jay Bala is going to join us, and he has a view that oil is heading to $60. So, that's well, that's going to be good news for a big importer like us, and of course, individual businesses as well. Deepan, it's a pleasure as always. Thank you very much, and appreciate you joining in with a lot of that perspective. 85 points, by the way, on the Nifty. 18,150 is what we have. Amit Gupta is Vice President and Fund Manager at ICICI Securities, and he's joining us right now to take some questions. Amit, good to have you with us here. Thank you. I mean, what is going on? I mean, the depth of moves that we are seeing. When I say depth, I mean the number of stocks which are jumping on large volumes in the mid and small cap space. It's almost as if the market has has fallen in love with many of these names once again. Many are at 52-week highs, if not at all-time highs. Actually, not a large number, but many are. What's going on? What's your sense?
So we have seen many colors of the market near the same levels. I mean, if you remember when we were before around 18,000 and we were falling from almost close to 19,000. So we had seen, the kind of correction in the same mid-cap and small cap space. And I think what is happening now, because 2022, we saw the very high inflation numbers. And we saw the central banks, they were directly buying, a lot of gold. I think one of the highest buying of gold we saw in the last year, and equity remains subdued. I think the time is coming now when the commodities actually have come down. And despite dollar being subdued, we have not seen that kind of pullback in the commodities. And that is the reason now I think some risk on sentiment is emerging. And this is where I think the emerging markets, because when the dollar is subdued, you see more flows coming into emerging markets. I think that platform is getting ready for the equity markets now. And we have already seen many negatives. I mean, 3 or 4 banks in US, when that kind of news has come, we saw the credit default swaps actually moving up very sharply of the European banks. When I look into Deutsche Bank, when I look into, some other banks, and then all of these things are getting factored slowly in the price. And we believe that from Q3 onwards, in S&P also, the earnings are going to revive. So this is where the flows into equities, I think, are going to increase now going forward. And Indian valuations, which have come down related to the emerging markets, because it was 105% in the month of October, and now it is almost close to 65-66% vis-a-vis the emerging markets. I think that is going to get more flows going forward now. So I think more stock specific moves, more mid caps coming up. In fact, some large caps, because in the recent fall we saw some of the large caps had come down to good levels also.
Amit, afternoon. Can you tell us the reason behind your bullish call for PSU banks? Because stocks have already done well in the last 1 year. And outside of State Bank of India, which is the PSU bank that you like?
So my feeling is, if you look at the PSU bank, they had fallen because when the Adani news came up, we saw a sudden fall in all of them. There was a lot of uncertainty what is going to come out. Since then, we have already spent enough, time now, and slowly the things are getting absorbed, and nothing, significant has come out. And we believe, if you look at one of the biggest positive for the banks, so besides credit growth, which is coming up now in retail and SME segments, and I think it is going to pick up in the corporate segment also now, and more private capex going forward can actually push it more, which is more gradual right now. I think the other positive is the bond yields. So if you see the GSEC yields since the month of May 2022, they have remained quite subdued. We had repo rate around 4% in the month of May, and then it moved to 650 bips, almost 250 bips of surge. But bond yields or GSEC yields or 10-year GSEC yield, which was near 7.6%, it continued to remain below that level. And now it has come down to almost 7.12%. I think this is where, the PSU banks will find a base formation, possibly a lower downside, and eventually with the numbers, I think they should start moving up. Now, the only fear in the market left is the NIMs, which possibly are peaking out, and they may, start coming down by a few bips. My sense is, if you look at the personal loan growth and look at the repricing of the corporate loan book, because corporate loan book can be the joker in the pack. I think if this capex starts and the repricing of the loan book starts, I think this is good for the margin accretive perspective from the banks.
Okay, by the way, we're at about 3 o'clock and the market's not doing too much, still about 18,150, so not able to make much headway towards the highs of the day or beyond. That's the story. But anyway, it's holding on to the bulk of the gains. You can see today's day has been largely steady. I mean, we had that big gap up in the morning and then it's kind of just held there. Not too much traction on the way up. Amit, hi, good afternoon. Nigel was earlier telling us about one of your portfolios where I think you used to have Infosys. Just want to check, given what we've heard from the company this quarter, is there any rethink? Did you or are you looking to prune down your holdings? What's your view on large cap tech?
So no major rethinking on the IT pack yet, and no major downsizing also now, because I think the valuations have come to be better. 1200, I think, is a good level for Infosys now, whatever we think of. I think many things are getting factored. Yes, we are seeing the hiring pick up now. If that starts, I think the stock also will start finding its momentum. I think the next big thing is going to be how the earnings are going to shape up in S&P, because there are 3 major segments. One is BFSI, the other is retail, the third is the high-end technology. All these 3 contribute a lot to the IT companies, particularly from the North America. And I think if the S&P numbers starts recovering from these 3 segments, it is possible that IT will also find some solace at these levels. There may not be a very sharp pullback, but I think a good support from Nasdaq and possibly from these earnings, I think can limit the downside now for these stocks. So no major downsizing now from our side in the IT pack.
All right, Amit, just hold on to that thought. Maybe you're talking about a couple of other names in the aviation space that could be running into trouble. And Interglobe Aviation could be a potential beneficiary. We had Dipan as well that commented on that. He was talking about them posting their best ever numbers. Just take a look at that stock. You know, that stock has moved to the high point of the day. It's up close to 2.9% odd. It was up 1.5%. But if you just pull up a green candle, you'll see a sharp up move is what you're seeing on that particular name. But Amit, I heard you talking about some of these PSU banking names. Well, I believe you like the PSUs as well, because the past space is what you're quite optimistic on. And NTPC makes it to your list. Tell us more.
Yes, I think because if you see the power space, it is coming out of a long consolidation period now. Large many years we saw that if you look at NTPC from the power generation, when the power was going to the states, the discounts they were unable to pay. I think that was a major problem. And now we have seen that some part of it is, has come back. We have seen that the company now is moving into renewables also. So far in their life, they had a 70 gigawatt of thermal capacity and now 60 gigawatt of renewable capacity they are going to build up in the coming 8 years. If you look at last year, in financial year 23, they added another 3.3 gigawatt. And I think very soon in the coming 1 or 2 quarters, they are talking about 17.5 gigawatt, out of which 10.5 is coming from thermal and the remaining 7 gigawatt is coming from hydro and renewables. So I think these are good points, good things which are coming up in NTPC. This is a company where if the raw material cost increases, which actually has been one of the factor to many companies in the recent period, it does not, hamper the profitability too much because it runs on cost plus fixed ROE model. I think this is something which can come good for the company. So our sense is looking at this, the peak power demand in India, which is continuously rising. I mean, it used to be 202 gigawatts when I look at 2-3 years back. Now it is coming to 231 gigawatts. So electricity is moving to the villages. And we are going for more industrialization in India, more manufacturing push. I think this is where there will be more demand going forward. So this whole space where there is a policy push and the valuations also are inexpensive, I think it definitely demands a buy now at these levels. That is why we have included NTPC in our portfolio, which is ACE equity portfolio.
Amit, thank you very much for joining in. Some more stocks up for you on your screen. UCO Bank. A sharp jump of 86% in the company's profitability. The asset quality has improved on a sequential basis. The stock has gained close to about 2.5%. The net NPA at 1.29% is lower compared to 1.66% in the December quarter. Havells is slipping a bit ahead of numbers, which, tomorrow. So Havells is actually in the red now. So watch out for that stock. And finally, Interglobe Aviation is tilting on the way up, 2.5% gain. Reports are suggesting that Go First to stop taking bookings for 2nd, 3rd, 4th of May. So Interglobe Aviation is on the rise. Slip into a break. On the other side, as always, we'll get you a few BTST calls from Mitesh Thakkar. Welcome back. One of the big movers today is Newgen Software. The stock is up 15%. It's a fresh 52-week high. And the rally so far this year has now extended to a 60% gain. Came out with their numbers. Now, Q4 is typically a strong quarter for the company. And boy, the company has clocked in very strong growth rates, 31% jump on a year-on-year basis. Remember, compared to the rest of the IT pack, Newgen Software gets less revenue from Europe and US, which is where the problem really is. So I think last time the management told us less than 30% of their revenue comes in from US and Europe. So it's relatively unaffected by the macro uncertainty. Margins too have improved sequentially. Now, Q4 is typically a very strong quarter for the company seasonally, so you always see that spike on in the quarter of Q4. But this time it's been a little bit more, and always in Q4 margins pick up due to operating leverage, and this time EBITDA margins are at a 2-year high. For the full year, the company has clocked in a revenue growth of 25%, which is very strong. EBITDA margins have been coming off. The company's guidance at the EBITDA level was 22 to 23%. For FY23, they've just fallen short of that guidance, and they've ended with margins of 21.8%. But very, very strong set of numbers there. The other one that we're looking at is Coforge. Now, there was a large block deal which took place in Coforge. It was a block deal which was valued at nearly 900 crore rupees, took place at a price of 4,145 rupees. 21.55 lakh shares changed hands. So the stock is under pressure due to the supply because of this large block deal which has taken place today. We don't know officially who the buyer or the seller is, but it could be, that's what we've picked up, it could be Bearings. Now, Bearings is the promoter entity of Coforge. They've been consistently selling their stake in Coforge. It's a PE company. They had gotten in at a low price, and for the last many quarters now, they've been selling their stake. Their stake was as high as 70%, in September of 2020. And since then, over the last 3 years, the company has brought down their stake from 70%, and as of the last quarter, it was down to nearly 30%. So now that the Q4 earnings are good, the numbers were actually fairly good, and Coforge stock also went up post those numbers. We've seen a block deal. Now we'll wait for the details in the block and bulk deal, who the seller is, but it could be Bearings because that's one entity which has been selling stake in Coforge. But let's get you a few Nigel, you wanted to say something?
Yeah, no, I also wanted the BTST ideas, Rima. So, we were heading in the same direction. So let's get in Mitesh then. Mitesh, before we get to that, I just wanted to highlight the Nifty Financial Services Index. That's the one that plays out the weekly expiry. So just pull out the intraday chart. That's come off a little bit from the top. That's why the Nifty, from being up more than 110 points on, it's come off a wee bit from the high point of the day. So just keep an eye out on the Nifty Financial Services Index out there. Mitesh, but what are the ideas you have for us? Rima was eager. Me too. Tell us more.
Yeah. So I have a BTST on NTPC. See, after giving a correction, it's bounced back strongly today, gap up, and then closing near the day's high. Keep a stop at 174.5. Look for a target around 179, and the other one is ONGC, and both these stocks have been doing very well. ONGC making a fresh swing high with volumes today. BTST here with the stop at 162.5 for targets of 167.
Okay, got that. Mitesh, thanks very much for the calls. We'll shift focus now to our special segment on earnings, the earnings corner, as we call it, where we're going to be tracking all the key earnings action of not just the day, but actually for the rest of this week. Now, to name a few, all eyes are going to be on Tata Steel and Ambuja Cements. Those are the numbers we are expecting today. Tomorrow, the big one to track is going to be Titan. On the 4th of May, which is Thursday, auto names like Hero Moto and TVS Motor will be reporting numbers, along with names like Dabur and HDFC. So Thursday is a pretty heavy day for earnings. And Friday, finally, we will hear from Marico. So it's a pretty packed week with respect to key earnings. Okay, and staying with that theme, let's focus on the here and now. And the biggie, as we just told you, is Tata Steel, amongst others. So Nigel, over to you. What are the expectations this time?
Well, just look at the screen, Surbhi. Pre-positioning with Tata Steel is always something that gives you a bit of a hint. And that's precisely what's happened. The street believes Disco will do the disco. Sorry I use it every time, but the street is sensing a better set of numbers coming in from Tata Steel. Now, just focus on the basic numbers first. Revenue is expected to degrow by close to around 15%. EBITDA will see a sharper decline on a year-on-year basis. Margins, though, there will be a big compression on a year-on-year basis, but on a sequential basis, there'll be an improvement of close to around 200 basis points odd. The reason that the top line declines is because steel prices are lower and European volumes as well are lower. But the two big numbers you're looking forward to. One is the India EBITDA per ton, a sequential improvement, 13,350. The street believes that will be better than that. So that's point number one. The second factor is the European EBITDA per ton, the loss actually. We are working with around $107 per ton. The street sniffs that maybe it won't be that bad. So let's see whether or not that happens. And the other key montrables will be, when does the European business turn around? What is the debt reduction plan from here on? And the broad sense in pricing as well as demand. Numbers should be out, I think, by around 6:37 p.m. today. So that one will react to numbers tomorrow. But the street is sensing a better set of numbers, it appears so.
And what about Ambuja?
Well, for Ambuja Cements, we already have ACC's numbers, so we're looking at the standalone numbers this time around. On the top line, we're working with around 6.5%, the basic numbers. EBITDA margins will get a little bit compressed on a year-on-year basis, though they'll improve by 200 basis points on a sequential basis. And the profit number should come in a little bit lower. The key number you're tracking out here is volumes. Remember, ACC surprised on the volumes front. It beat all street expectations with the 10% growth. So how much of that was intercompany between ACC as well as Ambuja Cements? Well, our poll threw up a number of around 2% growth. So we'll watch out for that number. The absolute terms, it's around 7.65 million tons. The margins will recover sequentially because the cost focus, the synergy benefits as well that they've been talking about with regard to the group. So it needs to flow through. So we'll keep an eye out on that. Management commentary on demand, pricing, the promoter commentary on how they want to go about their business is going to be very, very crucial. And merger, if at all any, we'll have to keep an eye out if there is any kind of hint that comes in. Logically, that should happen at some point of time, but when is when the street is asking for. So we'll keep an eye out on Ambuja Cements as well. It should be out in the next hour or so.
All right, Nigel, thanks very much for that. You know, the market has come off a little bit from being up 100 points, maybe a little over 100 points at 30, 40 minutes ago. We are up 75 now, so 18,143, nothing dramatic, but just a little bit of cut from the high point of the day. Now, Titan will report numbers tomorrow, amongst other companies which will report, but let's hear it from Mangalam in terms of what the expectations are this time from Titan. Mangalam.
Well, for Titan, you know, the expectations are usually managed by the company itself, where it gives us a cheat sheet to work with, you know, after every quarter. And this time around, what the cheat sheet says is that one is to expect 25% revenue growth in the company, and at the same time, jewelry business will grow by about 23%. The other 2% growth would be led by all the non-jewelry businesses, which have been growing much faster than the jewelry business. So watches have grown 41%, emerging businesses up 84%, and Taneira, which is their sarees business, has grown upwards of 200% as well. So analysts have plugged all those numbers in, and they expect three key things to watch out for: 25, 35, and 50. 25% on the company's top line, 35% is the EBITDA growth that we're seeing, and as a result of which the net profit jumps by about 50% as well. The important thing to watch out for, and this is something that the company hasn't given in its quarterly preview, are the margins. So for jewelry business, the street is working with 11 to 12% margins. For watches, 10 to 11%. And for eyewear, they are working with margins between 15 to 17%. And all of this would mean that the EBITDA margin of the company is around 11.6%. 35% studded ratio is what the street is working with as well, and that would mean the margins in the jewelry business would be much higher, because margins in diamond jewelry or studded jewelry is much higher. Let's keep an eye out on the management commentary, especially on the demand in the first quarter and how Akshaya Tritiya went for them.
All right, Mangalam, thanks very much for that. That's Titan for you. I think Havells reports tomorrow and a few others as well, which will be closely tracked. More on that later. Jay Bala of CashTheChaos.com is with us with some thoughts on the market. Jay, good to have you with us here. Thank you very much. You know, which is going to come first? I mean, you were saying we're in a big resistance zone. You're waiting for the market to tell you that it wants to reverse. And there are supports at 17,800, 17,550. Almost equidistant from new highs and the supports that you're mentioning. Which will come first in your opinion? Will we make a dash to the new high before we see anything else?
Good to be here, Prashant. The probability that the markets are going to take out the record highs is quite low compared to the probability that the markets are going to break the 16,228 low, 16,828 low that registered in March. So, you know, I would think the markets are, very close to a reversal, and the probability of market going to record high is, skewed much lower compared to markets going much lower.
Okay, all right, Jay. So if we pull back, what level do we pull back to? And also the Nifty Bank. Now that's been a star performer. How are you seeing that one shaping up? Because buy on dip has really worked out there. Levels you're tracking.
Yeah, the bull bear divide for the Nifty Bank index is 41,900. As long as the index stays above that, you can consider the short-term trend to be up. But SBI has come to a very critical juncture. We're just waiting for a reversal to come through. There is some weakness visible in private banking space. Axis, ICICI. Now Axis is showing some amount of weakness. We need a breakdown to come through, but despite the weakness, ICICI is slowing down, but not yet shown any sign of reversal. But it is clearly slowing down. But the key is going to be SBI. If SBI were to trade below 560, 557, then there is a probability that that's going to lead the a down move for the banking sector. But as long as 41,900 is maintained, we don't consider the banking sector negatively yet.
Okay, that's on the banking sector. What about Reliance? Jay, hi, Surabhi here, afternoon. What about Reliance? I mean, I was just noticing that along with the rest of the market, it's managed to creep up. I mean, 2,200 somewhere in early March. Now we're looking at 2,400 plus. Does it inspire any confidence?
See, the very long-term picture for Reliance is, it's probably done a complete cycle from 1998. It's too long to discuss at this point. But I'll say from the short-term point, if 2290 is maintained, 2020 to 2290 is maintained, I think it's okay. But to me, the bounce from the recent low in March looks like a corrective rally. So it's not going to lead the markets much higher.
What about IT? Many believe that the IT index per se made a near-term low on the day of Infosys numbers. And since that level, the Nifty IT index is up 7%. Your view on Nifty IT and any individual constituents?
Yeah, if you recall from our last week interaction, I had mentioned that there are a couple of high-risk buys. I believe Wipro came with a miss on the numbers. I don't track, financials, any company's financials. But apparently, despite the miss, the stock is going up. And so it is some of the IT stocks are seeing a relief rally. I'll treat this as an oversold bounce and nothing beyond that. The real test comes at about 29,000 for the Nifty IT index. So, treat this as an oversold bounce and, maintain stops and book profits along the way. If you could recall, for several months now, I've been bullish on the mid-cap space, and I've said that it'll be the frontline heavyweights that's going to drag the Nifty IT lower. But, that's exactly what's happening. So nothing big that's happening there, but an oversold bounce.
Okay, capital goods is one area that you like, right, Jay?
That's right. As long as Larsen is trending up, I pointed this out last week too. The index is doing pretty okay. 36,500 was my projection from last week, but it's doing a little bit better than that. But I think it's continued to remain a little bit bullish here, but only for the short term. But the next leg continuing forward is going to be a little bit more choppy. Probably come back to 35,000 on the capital goods index and then go back to fresh record highs. And that will probably the ultimate top. But that's just a working thesis at the moment. We want market to endorse that.
Okay. So, Jay, we've spoken quite a bit about some of the domestic trends. What about global trends? Anything interesting that you're noticing there, whether it's on the equity side or, equity indices, maybe commodities, rates, anything that catches your eye? The US, Europe?
Oh, definitely. Surabhi, the most important thing is to keep your eyes on the US banking index and the European banking index. Both are set to decline quite sharply. I don't think we have seen the last of what's happening in the US. What we've seen JP Morgan taking over FRC. If you look at the M2 money supply, it's at it's contracting at a pace not seen for the last 70 to 100 years. And the last time M2 money supply was negative like now, the M2 money supply on a year-on-year change is 4.05%, negative 4.05%. It was not seen during the financial crisis of 2008. It was not seen during the dot-com bust. So, there's something very, very unique is happening. And, I reached out to a few people who've been in the markets much longer than me. And they tell me that there have been 4 instances when this has happened. That was in 1932, 1920, 1878, and 1893. So all these 4 were coincidentally were depression years. So, I'm not projecting anything, but this is just a data point here. And so, the US banking index, the KBW banking index is likely to go towards the COVID lows, which is a mild bearish scenario. The bigger bearish scenario is going to be, it's going to retrace closer to the 2008 lows.
Okay, this index is the regional bank index, right, Jay? Not the big banks index.
Not that's KRE. Regional bank is KRE. I'm talking about the KBW banking index, which contains
the big banking, the overall, okay,
Yeah.
the benchmark, okay, banking index. All right, you're saying that should that eventually heads back to COVID lows. All right, fair enough. We'll leave it there, Jay. Thank you very much for joining us. Good speaking with you, and it's always a pleasure. Jay, overall, basically still cautious, saying that the market's now in a very strong resistance kind of zone, and it's time for a reversal once again. He says the likelihood of the market making new highs, which is, right around the corner, according to him, still remains low. We'll take a break here. More on the other side. Coming up, 3 minutes to market close as well.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
The new Fiamma Mint Charcoal Soap. Refreshing fun.
कुछ फ्रेंड्स ना बिल्कुल फैमिली जैसे होते हैं। मेरा फ्लैटमेट जस्ट लाइक माई मॉम। कपड़े आज धोएगा या अगले साल? हेलमेट ओए उठा। इसीलिए ना आई गॉट अस एयरटेल का फैमिली प्लान। 2 कनेक्शंस सिर्फ 599 में। मतलब वे बेटर देन अलग अलग रिचार्ज ना। सुन नाश्ता बनाऊं?
फ्रेंड्स हो या कॉलीग्स, सबके लिए है एयरटेल फैमिली प्लान।
Also available for real families.
I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Okay, welcome back. We're going to end at 18,135 or so. Adjusted, maybe the numbers will change a little bit, but not about 40 points off the highs that we saw earlier in the session. At 237, we made the high point in the last hour, which was at 18,176, and we are basically ending down 40 points from there. So there is a pullback which has happened. And by the way, we are ending right under the upper end of the daily Bollinger Band, which we put out in the morning, which stands at 18,137. So you're right under it as far as the close is concerned. So that's the Nifty for you. Gap up, did bulk of the gains right in the first hour, and then, held on to gains before giving up some in the last 1 hour or so. Prima.
Well, by the end of it, the index is up close to about 1/3 of a percentage point. Midcaps did well. The midcaps outperform in terms of sectors. The Nifty Metal Index, IT Index, both saw gains of over 1%. On the losing side, Pharma was a bit subdued, led by names like Sun Pharma down 1.5%, and autos were a mixed bag post the April sales numbers. Hero MotoCorp, the top Nifty loser, down 2.5%, while Maruti Suzuki, Eicher Motors managed to close in the green.
Well, yes, I'd have to agree with you folks. The day kind of felt like we've stalled. It started with this great bang and then kind of just didn't go anywhere. In any case, on the mid-cap screen, some stocks that stood out. RBL Bank down 4.5% on the worsening asset quality, or maybe the rise in slippages, better way of putting it. Zomato's lost about 2.5% on the way down. Ashok Leyland reacting to its sales numbers, down about 1.5%. That's on the way down, but you have a lot of winners in the mid-cap market, no denying. Huge breadth. 1,700 stocks advancing to about 1,100 declining, and huge winners. Ircon 16%, RBNL 10%, IRFC 6.5%. You have stocks like IRB Infra up about 4.5%, BHEL 4%, IDFC First Bank, very robust growth in margins and of course loan growth. 4% up on that stock as well. REC, ONGC. Today was an out-and-out PSU day, by the way. Big moves on a lot of these PSU stocks. Let me throw in a smaller company as well, Parag Milk. Good numbers. The stock was up 9% in the morning. Finally, is ending the day with about a 4% increase. Astra Micro saw some action. Interglobe up about 2% as well. So mid-cap market is flourishing, and of course lots of stocks flying around today as well. Okay, well, on that note, it's curtains on this edition of Closing Bell. Many thanks for watching, but don't go anywhere. We have lots more coming up. In fact, our special show Commodity Champions up with Manisha in just a bit.